The biggest IPO or the most successful IPO is also live from our studios today after a strong Q4 earnings performance. Thyrocare, in a dull market, has started off reasonably okay, about 1.5% higher. So strong Q4 earnings performance, and that's the case for a chat. For getting in Dr. A Velumani, he's Chairman, CEO and MD Thyrocare Technologies, joins us first on the channel. Good having you, Dr. Velumani. Thank you so much for joining in. So, congratulations. I won't say I'm surprised because you had shown this confidence around the time of the IPO and the listing as well. Tell us the way ahead. I mean, you've done what you've done in FY16. You think the road looks set for FY17 at least, if you can't predict the next few years?
I think FY17, 18 is fairly well in place. If at all there can be shocks, that will take some more time. But as I said, past 5 years, we had a CAGR of 23%. I think it continues. This year, in fact, is better than even last year.
Yes.
We had a growth of only 20% last year, year over year.
Yeah.
This year, we have a 30% growth year over year, which says that either 30% would be there or even slightly it could be better. But then at least next 2 financial years, I don't see any concern.
Right. On the margins, however, I think you had indicated that there could be some erosion. We are looking at margins coming off and now below 40%. Last time that you'd indicated that over the next few years it will slide slightly.
No, I think as a standalone business, laboratory business has this year also an EBITDA of more than 40%. Okay. Somewhere 40.8 to 40.2. Okay. That's the only erosion I have seen. So if you look at it, 40 plus has been a genetic achievement, literally for so many years. I don't see that any reason to go down, and 40 should be maintained. And if at all a challenge, it should be 40 plus or minus 1, nothing less than that.
Just wondering, sir, though, I mean, just a follow-up from Tanvir's question, you've, in a manner of speaking, been known as the disruptor of sorts as well within the industry. Over the course of the next 5 years, would you look at the cost of your margins, the cost of your treatments to come down and, volumes to go up? And if that is indeed the case, would you believe that there could be willingly an erosion of EBITDA margins over the course of the next 5 years to the tune of maybe 400, 500 basis points?
The disruption version 2 is done.
Right.
Version 1 was done 20 years back.
Right.
And it had an impact for 18 long years. And then only 2.5 years back, we felt the growth of the company has come down as much as growth of the industry. That gave me a signal that it's time to do one more disruption. And we did it 30 months back against even the wishes of the investors, because they were concerned that reducing the price would lead to reduction in profit.
Right.
I had a courage to, in fact, override the board consensus that we should not, and I did it. And I'm surprisingly, in the last 2 years, if you look at the growth, what went down to 12% has come back to 20%, today 30%. I won't be surprised if it goes still high, but I believe that the boldness with which I reduced that rate was version 2 of disruption has given a comfort, according to me, for next 8 years.
Oh, so you don't foresee
I don't see until year 2020 a necessity to look at a need for disruption.
Okay. How has Q4 been? Sorry, Tanvir, just one more question. How has Q4 been for you, though? I mean,
see, always Q4 is around 35% of the entire year, conventionally. Financial year end is better than the previous quarters. So this year also we had quarter over quarter a 30% growth. So all quarters have done a 30%. That's why you see the entire year doing a 30%. So for us, this quarter was as good as what we planned or expected.
Okay. What about preventive healthcare as part of diagnostics? How much is the contribution?
Yeah, I think the overall analysis of the business which grows, which does not grow, if I look at, we make 3 segments. Thyroid, non-thyroid, and preventive care packages. Thyroid has not grown more than 10% because that has become a commodity of interest for everyone. This is open for competition by 3,000 players.
Yeah.
Now then comes non-thyroid, which has grown roughly around 20% CAGR. And the preventive care Arogyam has grown 30% CAGR, 5 years. So we believe that that will be the engine to take the entire business ahead. Next 5 years, we must see a CAGR of 30% for Arogyam. That will bring the overall percentage of revenue by Arogyam should be somewhere 75 plus.
Right. My only follow-up then, sir, is, because of your ad campaign that's running in, which has become very popular, and Neeraj was talking about how the tagline is very catchy, think thyroid, think Thyrocare. So I have two questions there. My first question essentially is, wouldn't the brand communication be a bit misleading, because then you're looking at preventive healthcare being your mainstay and your growth driver, whereas you're indicating to the public at large that it's a largely thyroid-linked business?
Yeah, I think preventive care also has thyroid. And our preventive care profiles are much cheaper than thyroid profile of the market. So the minute I drive them to think thyroid, then they think thyroid, then they come to do a test for thyroid, they see thyroid plus lipid plus liver plus diabetes all put together is as cheap as thyroid.
Okay.
So then this is way of asking them to come in, and then they see the whole value inside, and then they go for the preventive care. In fact, I am promoting thyroid. What grows is preventive care.
Okay.
This is for the last 3 years I have observed, then now I am overdoing it.
Okay, and if it's working for you, that's great. Also, my second tied-in question to that was advertising as a percentage of sales. Since you are going to be looking at, this is a business where there's not as much, especially the preventive healthcare, there's not as much competition. You want to scale up, you want to get more market share, so you're coming in with this advertising and promotion campaign. How will advertising as a percentage of sales shape up as you look to push your brand to garner more market share?
I think this industry has very little to advertise, because pathology as an industry has not been conventionally advertising. But for the last 10 years, if we look at, we have advertised. We are, in fact, the first people in diagnostic field to put up a brand and start advertising. So we have done in this last 10 years 5% of the total revenue on an average. It should even go to 10%, because today our advertisement is more on digital. Earlier it was more on print. Print gives less return, digital gives better return. And in fact, people who are closer to digital media are my prospective clients. So today we find a better returns. So we should go almost at 10% of the total revenue into advertising and publicity, which would certainly grow the business much better, faster.
What are the targets there? I mean, with that
this year we have earmarked around 40 crores. That's something with this year.
No, in terms of the market share. So if you're increasing your advertising as a percentage of sales from 5% to 10%, how much commensurate growth you see in market share?
I think we don't truly study Padosi. The market is unorganized, very difficult to draw any numbers. If we grow 28%, if we can make it 35%, it is worth that 5 or 7 extra percentage to be spent. That's only we look at bettering ourselves than the previous year by doing a budget and marketing.
Okay. Let's talk about the expansion plans as well, because post the IPO, I know you've indicated it in bits and pieces, but I just wanted a sense of where do you see your lab count at end of FY17? And the obvious question that comes in for somebody who successfully raised an IPO is, when is the next time that they foresee they'll need equity capital requirement? Is that going to happen over the course of the next 18 months, or you don't foresee that?
I think the first point is this IPO did not give me any money. Literally 30,000 crore was in my account, and I did not have an access to a single crore from the company. It all has been given back.
Right.
Having said that, the company never had been looking for funds. Funds are there in the hand. But in the IPO pitch, I had to tell what plans I have got. So I came up with an idea that we should have 25 laboratories. We have 5 laboratories and they are doing well. I felt 25 laboratories I must do in 2 years. But it looks like it will take a little more time, because unnecessarily putting capacities and waiting for work will not be productive. So we might put another 3 or 4 in this financial year. We are addressing to the state market, not to the just state headquarters, now to the district headquarters. By going a bit more closer to the market, we don't know how it will give results in terms of volume, that needs to be studied in the entire year. If volumes are growing, then we might go little more aggressive in completing the 25. Otherwise, we have our own comfort to take this 25 as a journey, maybe 2 years, 3 years, 4 years. Having said that, the numbers could certainly come because in this field, what is important is quality, cost and speed. Now, quality we have best, in fact, all the probably top 25 players have the best. There is nothing in this industry where a player make a better quality because it is the vendor who gives us the solutions. Then in the speed. In the speed, if we go closer to the market, we will deliver a better speed. And in the cost, I am willing to, and I am as such the cheapest, so I realize that the numbers can grow better if I improve the speed. And that's where I felt that I should do a regional processing facility. We are having 5 and running. They are producing better, faster turnaround time. It's likely that we would have a result of volume growth because of additional regional processing laboratory supporting us by 2 to 3% more for the next 5 years.
Right. But you won't, my final question at least, you will not go ahead and have, for a lack of a better word, a constrained expansion plan because of lack of funds. You are doing it only because you don't foresee the need to go too aggressive.
Yeah, I think if at all funds is a necessity, I just have to make a call to my banker who will give me at least a 500 crore fund straight.
That's my question. Okay.
Absolutely, fund is not at all
And
a problem.
if you need funds, you'll rather opt the debt route right now.
I think no, going back once again to the investor is not there for next 25 years.
Wow. Well, that's a strong statement. I think markets like to hear that, Dr. Velumani. No equity dilution is a holy grail. So I'm glad you have that. But Tanvi, anything else?
No, you have a plan in place, and we wish you all the best.
Thank
for
you
that.
very much, and thanks for making me to spend some time in the morning.
No, thank you so much for joining in today, and congratulations on
Thank
the
you very much.
quarter
Thank
as well.
you.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.